For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everyone. Welcome to today's webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today, our webinar's title is Introduction to Warrants. Okay, welcome everybody. My name is Shane Chu. I'm the moderator for this webinar. So if you want to learn how do you make money using, how do you make more money using smaller capital outlay, then you must learn about warrants, because warrant is a leveraged financial instruments that can help us to achieve bigger gain with a smaller capital outlay. Of course, as a leverage instrument, it also comes with risk, because when the market go against you, you can also make big losses using smaller capital outlay as well. So today, you are very lucky because you decided to enroll into this session to learn about how do you navigate the volatility in the stock market using warrants. So today we're going to learn a lot more about warrants, so you know that how do you use these leverage instruments to help you meet your financial goals. All right. So disclaimer. Whatever you share in this webinar is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risk. So allow me to introduce our speaker today. And our speaker today graduated with a bachelor degree in finance and investment. He also completed the CFA program on one attempt. So over 5 years of investment experience with a focus on trading Malaysian and the US stocks, commodities, and index futures. So he applies fundamental and technical analysis in his investing journey. So he has over 2 years of investment teaching experience with over 1,000 students, and his forte is also in wealth management and also financial planning. So he's none other than Debo. So Debo, welcome to today's webinar.
Hi Shane, thanks everyone. Good evening.
Very good to have you here.
Yeah, thank you. It's my pleasure as well.
All right. So I'm going to stop sharing my screen now, and I'll hand over the session to you.
All right. Yeah, let me just open up the chat as well. Right. Okay. Okay, I think everyone can see my screen clearly.
Yes,
right?
Perfect.
Okay. So, all right. Okay, I'll kickstart this presentation with some learning outcomes. So, first of all, we were gonna learn about what are the types of warrants. To be honest, there are quite some types of warrants. If you couldn't really differentiate it well, you could actually fall into some of the traps. So you gotta know what kind of types of the warrant there are. And secondly, we also know we get into what is the company warrant versus what is a structured warrant. All right. And then thirdly, we will have like what are the types of the structured warrants. So structured warrant, they do come with different types as well. I wouldn't say like types, is much more like a different kind of categories, like in maturities and years, and also in gearing as well, and all these things. And then we are followed by why do you invest in structured warrants? Okay. And then features of the structured warrants, and also what are the risks and also the benefits if you like to invest into warrants. And lastly, we also talk about how do you choose a warrant. Okay, so without further ado, we'll talk about first some preface. Okay, so I believe that some of you guys might here and there you heard about warrants, all right? And you occasionally you will heard that warrant is it's like a kind of investment that somehow will give you big money or go somehow like get losing a lot of money as well. So warrants, what kind of a warrant is that? What kind of an investment instrument is that? So typically warrant is actually just like an option. Okay, it's actually just like an option. Okay, so if you are not familiar with what is options, I would say give it some time to try to like Google it out, because to be honest, options is not really too complex to understand the definition of it, but it will be very complex to get into the tradings. All right, so to understand options is not easy, but we will talk about their risks and benefits. Of course, it's about warrant as well. Okay, so secondly, what are the categories of warrants? Okay, if we would like to categorize out warrants, right, it actually comes with two categories. To simply put, it's actually first thing first is the company warrant, and then secondly is the structure warrants. Okay, these are the two warrants that we have in Malaysia's Bursa Malaysia's. Okay, so typically you can also call it as this is also the two kind of options that we have for stocks investing. Okay, so company warrants, meaning to say it's the warrants that actually issued by the company they own. So it is usually it will issue by either right issue, bonus issue, or maybe different kind of corporate exercises as the company wants. Whereas a structured warrants is actually issued by third party. Okay, it's issued by third party here. It can be the investment bank. Okay, most of the time it's in the investment bank, or it can be some of the eligible brokers like Macquarie and different kind of international banks as well. So it is not issued by the company, so typically you can call it, it's more like an independent warrant. Okay, it's independent warrant. Okay, so these are the two categories of warrants, and they do come in a different kind of a category as well. Okay, and they do share the different kind of risks. Okay, so later on we'll touch on the risk, then I will specify clearly, okay, which type of a risk is much more dominant in maybe corporate company warrant or structured warrant. All right. And then to give you guys an idea, okay, the company warrant usually it will code as, you know, WB at the end of this stock code. Like for example, Kejaya, we have this construction company in Malaysia, Bursa Malaysia. It is coded as Kejaya WB, so you can know straight away that this is a company warrant. And as for structured warrants, it usually have this code as is C2F. You usually have this number at the side of it, or maybe at the last of it. So you can straight away know that this is the structured warrant. That and then at the end of it here, you can actually know that it is issued by which investment bank. So this is this particular structured warrant is actually issued by Maybank Investment. Okay. Okay. Here we will go into company warrant versus the structured warrants. Okay. So I will point out the main difference between company warrants and structured warrants clearly later. But first, let's go through what are the small details of these warrants. So if you look into it, right, as you can see, company warrants here. The first thing about this is issued by the listed company. They are the issuer themselves that issue to the shareholders. Okay, so the underlying assets, it can only be the share of the company because it is the company warrants, right? So it is the listed company's warrants. Okay, so it can be only on the shares of the companies. Okay, so on exercise, it will also give you additional shares. Okay, it will give you additional shares. Okay, which meaning to say, if you would like to exercise your warrants as an option, meaning to buy, to sell. Okay, we'll talk about that later. Okay, then the company itself, they will issue additional shares to you. So it may have a certain dilution effect as well. Okay, but most of the time, warrant, it's the number of the shares from the warrants is much more smaller than expected. So the dilution effect, you may not see that clearly. Okay, from this kind of conversion. Okay, and the maturity period, it can be very long. Okay, it can be up to 10 years. Most of the companies, they will issue the maturity up to 5 years. Okay, meaning to say you can hold this warrant up for 5 years. Okay, the right to exercise the warrant is up to 5 years. Okay, and then for market makers, okay, this is the key difference between company warrant and structured warrants. Okay, so company warrants, they don't have this market makers presence. Okay, they don't have this market makers to give you the liquidity, okay, of the warrants. Okay, I will explain it briefly later. What is the market makers? Okay, and then just bear in mind that company warrant, they do not have any market makers. So typically to say, company warrant WB usually has a very small liquidity. So they are trading on a very small volume on a daily basis. Okay. As for settlement, so terms and conditions is defined by the issuers. Okay, it's the same thing for the structured warrant. So the stock code is start with WB, or any kind of a different kind of codes like that. Okay, so for structured warrant, the main difference, I would say, first thing, as shown here, market makers, they have these market makers. And then the second difference is that their maturity period is much more smaller compared to the company warrants. It's usually up to like 3 months, 6 months, or maybe perhaps a year. Usually, it's like within a year. Okay, it's quite less likely that they will structure up warrants up to 5 years. Okay, so it's quite a rare case. Okay, although it does happen, but it's quite a rare case in the Bursa market. Okay. Okay, so as we mentioned just now, what are market makers? Okay, what are market makers? Okay, so if I would like to explain it briefly, market makers is the middleman between the buyers and the sellers. Okay, but if you like to give it a role, who is this market makers? It will be the issuer of the warrants, of the structured warrants. Okay, remember, market makers is only available in this structured warrants. Okay, so the structured warrants is actually issued by the investment banking. Okay, so you can call that market makers actually the investment makers. All right, so what do? Typically, they provide the liquidity in warrants. Okay, typically they provide the liquidity in warrants. Okay, meaning to say, if there is a seller, okay, of the warrants, the owners of the warrants would like to sell this warrants, okay, in the markets, okay, and somehow this warrant, the structured warrant, is not having any liquidity in the market. So typically, this market maker can choose to actually take up the orders, and then they will provide the liquidity to give them. Okay, and also if let's say the buyers, they would like to buy the warrants, but somehow there isn't any seller in the markets. So if the market makers, they do have the inventories. Okay, so bear in mind, this is called inventories, meaning to say the market makers themselves have the warrants on their own. They were able to issue, they were able to take the orders and sell it to the buyers. So they play a very crucial role in the market because they really provide a lot of liquidity. So when you're trading on structured warrant, it will be much more safer, okay, because somehow you have the liquid, okay, you have the volume to able to sell and buy. Okay, although you have a big chunk of a warrants in your hand, okay, you're able to sell it much more easier compared to the company warrant. Okay, so bear in mind, this is the roles of the market makers, and it does make a difference compared to the company warrants, because company warrants, it is very, very sensitive to what we call later on I will talk about is the time decay. Okay, it's much more sensitive to these things called time decay, and in a dangerous period, let's say it's close to the maturity, then it will be a very hard thing for you to sell off because there isn't any buyer anymore for the company warrants. Okay. So what are the types of warrants? Okay, if I would like to put it simply, okay, there is typically 2 types of warrant. Okay, it's the same thing as options. The first thing is the call options, okay, which is what we call like call warrant. Okay, so as you can see, call warrant is like on the green side of the chart, and this is the price. So meaning to say, call warrant is it's much more better, it's much more benefits when the price is going up. Okay, it will benefit to you when the price is going up. Okay, whereas put warrant, okay, put warrant, as you can see here, as the price is going down. Okay, so meaning to say this is it's a bear market. Okay, when the price is going down and you're having the put warrant, okay, you're having the put options, then this is a good thing to you because you're able to profit from it. Okay, so if we go a little bit detailed onto what is the call warrant, okay, I'll give some simple definition here. Okay, so call warrant is like the listed securities which actually gives the warrant holder, okay, which is the buyer of this call warrant, the right but not the obligation to buy, okay, at any time, any point of time. Okay, so meaning to say, if you own this call warrant, somehow you have the right to exercise, okay, to exercise the right price, the strike price, as here, I pointed out here, the strike value, okay, able to buy at this price, okay, but it's not the obligation that you must buy, okay, from this call warrant, okay. So both the buying price and exercisable time frame is predetermined, okay, as seen here, this top glove structure warrant, okay, this is like maturity is having until this year, August 30, okay, so another like a few months left, okay, and then the buying price, the issue price is actually at 3 ringgit and 68 cents, okay, which is a very bad thing because if you guys know, Top Glove is right now is trading at around 1 ringgit. So if you exercise this warrant, you have to pay 3 ringgit 68 cents, okay, to buy this Top Glove stocks from this warrant. So it doesn't make sense at all because you can just buy the mother share easily in the markets for like 1 ringgit. So nobody will buy this warrant then because it's not profitable. It's not valuable at all for at this point of time. Okay, so to simply put, call warrant, okay, call warrant is for bull markets. All right, call warrant is for bull market. All right, so if you look at put warrant instead, so put warrant, it gives you the right, but not the obligation to sell. Okay, so the difference here is between buy and sell. Okay, put warrant gives you the right to sell. Call warrants gives you the right to buy. Okay, so that is why we say call warrant is actually for bull market. Okay, because it gives you the right to buy. And let's say the market is going up, you are actually buying at the cheap price. Yeah, let's assuming that Top Glove is going good, 5 ringgit. If you own this warrant, you're able to buy this warrant at this mother share at 3 ringgit 68 cents. So you are able to benefit from it. Okay, from this bull market. But as put warrants is a different thing. Okay, it gives you the obligation to sell. Okay, not to buy. So when the market is going down and down and down, okay, let's say this pricing, this is actually a Hong Kong index, okay, the Hong Kong Hang Seng index, okay, let's say right now it's at the 10,000 point, okay, let's assume hypothetical numbers, okay, if let's say it's right now it's 10,000 points, okay, 10,000, so if the bear market gives you like, you know, it plays this index up to like 8,000, okay, assuming you have this put warrant, you're able to sell the index actually at their strike price. So if let's say we assume that the strike price is like 12,000, okay, no, maybe like 9,000, I guess. 9,000 is better. Okay, so you're able to sell at 9,000 instead of 8,000. So this is the put warrant. That's what we call put warrant. Okay, it gives you the obligation to sell. Okay, so that is why put warrant is for bear markets. Okay, it's for when everything is going down, just like a few weeks back, you know, until now today, as the stock market, as our Bursa Malaysia is going down and down at the moment. Okay, so if we like to summary up the call warrant and the put warrant, okay, if you like to draft it out, like how do you get profit from this? Okay, typically call warrant, you're able to calculate with this calculations, which is the share price minus up the exercise price. If it's a profit, that means the share price is higher than the exercise price, then you're able to be profit. Okay, and then you just divide by the exercise ratio. Okay, then you're able to know how much of the profit you are getting from this call warrant. Okay, whereas the put warrant, it's a different thing because you are getting the exercise price, you are selling an exercise price, and then you will just minus off the share price at the moment. So if it's a profit, if it's a positive numbers, then it will be a profit, and you just divide the exercise ratio, so you're able to get the idea how much of the profit you will get per warrant, let's say, something like that. Okay. Okay, so I'll go a little bit detailed here. Okay, why invest in structured warrants? Because for the beginning until now, it's much more like a concept of structured warrant and company warrants. You know, what are the types of it, like the difference of it between structured warrants and company warrants. But at the end of the day, we will also focus on this thing. It's like, why do you invest in structured warrants? Okay, but typically I wouldn't call it like invest, okay, for structured warrants, because I will share it on my own experience, as in warrants is not it's not suitable to call it invest, okay, because most of the time when we play on warrants, we only play it for the purpose of trading it. Okay, remember, it's called a trading it. Okay, it's not called invest. Okay, so for warrants, most of the time you're just trading it, because the time frame of warrants is very short. Okay, most of the time it's very short. So it's at most it can be just up to like a half a year, or maybe like at most rare cases it will be like up to a year. Okay, if you hold a warrant for like up to a year, I will guarantee you it will be a loss for sure. Okay, it will be never go up in value, and then you'll be able to get profit from it. So for warrants, most of the time we're just trading on it. We never invest. Okay, bear in mind on that. Okay, but why do you trade on warrants? Okay, why do you trade on warrants? Why not you just trade on other shares? Okay, so there are a lot of benefits here. Okay, we'll go through it one by one, and then I'll share it with my own experience. But the key benefits is actually using warrants is actually give you a lower cost. Okay, this is what I think is the key benefits of investing in warrants. Okay, it gives you a lower cost, meaning to say, let's assume if you are buying a mother share, 1,000 mother shares, okay, the shares value is like 1 ringgit. So typically your capital is 1,000. Okay, for that, you have to pay up the brokerage fee. Okay, so the brokerage fee, they will base on the 1,000 value. Okay, the 1,000 value. Okay, so if the mother share goes up in value up to like 1 ringgit 20 cents, okay, you earn a 20% 20% of this returns. Okay, but somehow you wanted to sell, you just sell it off, and then the second brokerage, it will then depends on the value of 1,200. Okay, so this 1,000 and 1,200 brokerage fee, it will be more higher compared to if you just buy the structured warrants, because structured warrants, if you want to earn up to 20% of the returns, okay, you can just easily use a very small capital, okay, to buy up, okay, and then based on that value itself, it will be much more cheaper in terms of this brokerage fee, okay, and so that is what I think the main benefits are trading in warrants. Okay, it's lower in cost. Okay, and then and the next thing, the next best thing that you should invest in warrants is that it gives you the leverage. Okay, meaning to say, just now the case is like one ringgit. I just write it off here. So 1 ringgit to 1 ringgit 20 cents. Okay, mother share you earns around like 20% returns. Okay, but if you go for warrants, okay, okay, let's say the warrant right now is trading like 10 cents. Okay, so it has like 10 times of leverage, 10 times of leverage. Okay, because your mother share is 1 ringgit, your value of warrant is 10 cents. So if it goes up by a small bit, you know, up to like 1, 2, you already earn 20%. So on that leverage, you earn a lot. Okay, you earn a lot. If let's say it goes up by only 2 cents, you earn already 20%. Okay, so usually the case is that if the mother share goes up, the warrant will definitely follows. Okay, but by what magnitude? Okay, this will then depends on the market itself. Okay, as I said, warrants, they do have liquidity issue. So you really have to depend on the liquidity of the warrants. Okay, so only then we are able to know whether this return is going to be higher or it's going to be lower. Okay, so and then the third benefit, of course, is called that you are able to benefit from the upside as well as the downside. But typically, it's not too obvious in Malaysia markets, okay? Because for put warrants, for let's call it put options, okay? We don't really have that much of a put options for individual stocks, okay? So put warrants, it's not really that popular on individual stocks. It's only on indexes itself. Okay, so that's what we call you are able to benefit from the downside. So as I showed just now, that is the Hang Seng Index, okay, the Hong Kong Index. That is only the available put options in our Bursa Malaysia. Okay, and then fourth benefit, of course, is small capital outlay, as I mentioned just now. You can use a small benefits, and then you're able to earn the 20% returns easily because it's leverage. Okay, it comes with the same thing. Okay, and then the fifth one, this is liquidity. Okay, but this one is only on structured warrants, as I mentioned just now. They do have these market makers. Okay, so only on structured warrants you are able to have a higher liquidity. Okay, but whereas company warrants, you don't really have that benefits. Okay, and then these two benefits, much more the small one, is like the first thing is that you are able to access to a diverse market as well. Okay, through this ETF or other kinds of S&P 500 and all these indexes as well. Okay, limited downside losses. It's much more like if you lose everything, it will be on the small capital outlay. Okay, not like your full amount in the mother shares. So this is what we call. They do also have this limited downside losses. Okay, for the benefit of investing, trading on the structured warrants. Okay. Okay, then we'll touch a little bit on what are the features of structured warrants. Okay, I'm not sure whether anyone of here really understands on structured warrants. So typically to say, structured warrants is like the underlying of shares or ETF index. So they will rely on an instrument, okay, to get the value. Okay, so that is why we call structured warrants a derivative. Okay, they will derive their value from this underlying assets. Okay, and then the second thing we'll touch on is much more like the effective gearing. Okay, this gearing, it means the leverage of the warrants. Okay, the leverage, as I point out just the example just now, your mother share is 1 ringgit, the warrant is 10 cents. So typically to say the gearing is like 10 times. Okay, so that is the gearing. Okay, you only use small capital, you are able to get a big chunk of the mother shares. Okay, the third features of the structured warrant is that the settlement method. So this is much more a thing that when you trade on warrants, you have to be careful on it. A lot of the warrants is they can have different kind of a form. Okay, it's not that much of parity in Malaysia, but it's much more complex in US markets. So in the US market, they do have their warrant settlements, perhaps it's instrument, or maybe if you want to buy a cash. Okay, meaning to say biocash is like you just get back your capital, but instrument they might give you straight away some kind of a company shares or commodities and all kind of stuff like that. Okay, and then this is much more important features that you have to know. The structured warrant, they do have this conversion ratio. Okay, meaning to say the number of warrants required to actually convert into 1 unit of the instrument. Okay, so if the conversion ratio is 1:1, that means for each warrant you have, you can actually just exchange it, exercise it to get 1 unit of the shares. Okay, so that is pretty straightforward, as you can point it out. Okay, this exercise style, it's most of the time it's the same thing in Malaysia. Okay, they actually do have like different kind of exercise style on the US markets, but I won't touch on that much because for that one it will be much more complex. If you would like to differentiate, there are 2 types of it. One of it is that you can only exercise it on the maturity date. Okay, And then there's also another type of the exercise style, which you can actually exercise at any point of time you want, as long as you feel that it is benefit to you. Okay, so there are two types of exercise style. Okay, there is one we call European exercise style, and another one is called American exercise style. Okay, and then exercise price. This is the price that you paid. Okay, to get for the 1 unit of the instrument. Okay, like just now the case of this top glove. Okay, at the 3 ringgit and 68 cents. Okay, and then also the expiry date. All right. Okay, this is perhaps I think the most important slide for today's presentation is the risk investing in the structured warrants. Okay, so because to be honest, I do see a lot of my candidates, my members, my students, they trade a lot of structured warrants, and I would say a lot of them, to be honest, because they do not really understand the nature of structured warrant, they're in a lot of loss, to be honest, because typically structured warrants, as I mentioned just now, specifically mentioned just now, is not, I wouldn't call it an investment instrument because it is really not for long-term basis. Okay, it is only for short-term basis. You're only suitable to just trade on it. Okay, if you're holding for warrants like more than up to a year, it's really a dangerous thing, and your warrants will definitely go down in value more than 50%, or probably more than that, like 80%. It could be that way as well. Okay, so warrants, you gotta be very careful, and you gotta be, having a really disciplined investment plan when you're trading on warrants. Okay, so there are a few risks, as I mentioned here. Okay, so the first thing first is that the asset may not perform as you expected, which is to say the mother share is not going up in value. Okay, we only talk about Malaysia's warrants. So Malaysia warrants is much more in core warrants. So only if value goes up, then only your warrant is worth much more a higher value. Okay, so a lot of time, like for example, at this current moment, US markets, Malaysian market, international markets is in a very bearish sentiment. So you can say that all of these warrants, it is not performed as to expected. Okay, so the warrants is really at very bad situation, and the value is really that is not that good at the moment. Okay, and the second risk is that the maximum amount at risk is your full investment. So this is to put it simply is that as you can as I mentioned, warrants is only for trading purposes. So if you would like to imagine your investment plan for the whole portfolio, okay, warrant is never the thing you can just all in. Okay, put up 10,000, you have 10,000, you just put up 10,000 into warrant. It can never be that case, okay, because you will never trade your whole capital, okay, onto, as a single thing or maybe like multiple things. You can never just put everything onto trading, okay. You must have like some mid to long term investment horizon view, okay. You have to hold some of this company with fundamentals, okay, then only your whole portfolio will be a valid portfolio. Okay, so this is what we call the biggest risk of the warrants. Okay, you should never invest warrants in full amount, or else you will be in very deep trouble. Okay, because warrants, it can really go down in value, like literally 99% go down to zero. Okay, so it can be a very scary thing. All right, okay, and third thing, this is much more like it's susceptible to other prevalent market forces. So definitely, because warrant is like a derivative, and because of a liquidity issue, sometimes it does deviate, okay, here and there. Okay, so warrants can also never be perfect. It's never a perfect thing. Okay, it can be the case that the mother share doesn't move at all, but your warrant somehow it drop in price. But that is also could be the time decay, which I will mention later on the slides. Okay, and then the fourth risk is that this is what I said. The warrant can be worthless, literally worth lower than your tissue paper, okay, because it can go in value to zero. If you just hold until the maturity and you never wanted to exercise it, so it can become worthless at all. Your capital will just be gone. Like if you put 1,000, then the 1,000 can just go to zero. If you are just holding it until maturity and you never wanted to just exercise it, okay. And then the fifth risk, this is the time decay, okay, which is as the note says here, the time value diminishes as the time goes by for warrants. Okay, so the time value, meaning to say the value of the warrants, it will goes down in value when it is closer to your maturity date. Okay, to your maturity date. Okay, so what does this mean? Okay, if you look at the basis components of the warrants, right, then you are able to know what I have been emphasis, the time value, the time decay, time value, time decay. Okay, so to simply put, right, the price of a warrant is like this. First thing, you have this component increasing value. Okay, you have this increasing value. Okay, so this increasing value is actually just if your warrant is a call warrant, then it will be your share price minus your exercise price divided by the exercise ratio. Okay, as I mentioned just now at the previous slide. Okay, if it's a put warrant, okay, I will repeat again. That means it's the exercise price minus your share price divided by your exercise ratio. Okay, so that is your increasing value. Okay, increasing value of this warrant. Okay, and then the second component of a warrant is that this time value. Okay, is this time value. Okay, so what is this time value? Okay, to be exact, right? Time value, it is the remaining time frame for volatility. Okay, I will call it volatility because it means to say the remaining time for the mother shares to actually goes up or maybe goes down in value. Okay, so meaning to say time value is the remaining periods, okay, that it only has to perhaps grow higher in value, then only the derivative, the warrants, goes up in value. Okay, so most of the time, let's say the company warrant is actually having a 5 years of maturity period. Okay, the value at the beginning of the time, it won't have any volatility. It won't have any volatility. Okay, only when the share price goes up and goes down, then only it will changes in price. Okay, but when it comes to the second third of the period, then you will see a very significant time value going down. Okay, from the warrant, because the remaining time that it has is getting lower and lower. Okay, it's getting shorter and shorter. So there isn't any time left for the warrants, to experience perhaps like goes up in value. So your warrant will be able to sell at higher value and you're able to earn a return, something like that. Okay, so most of the time warrants is like at the beginning of the 1/3 of the period. Let's say it's a 5 years, that means it's like a 2.3 years. Okay, beginning of the 2.3 years, the value is pretty much the same, okay, compared to the movement in the mother shares. Okay, but when it comes to the 2/3 of the period, then you will see the warrants getting much more lower in value. The value will just go down and go down and go down. Okay, probably on every month basis, it will just keep on going down and going down. Okay, until the last value of 0.005, which is 0.5 cents. Okay, that is like the last value of the warrant, meaning to say it's worth nothing, it's worthless. Okay, so to put it on a big picture, right? Okay, if you like to trade on warrants, right, okay, I really suggest your holding period is always less than if your holding period is less than 1 year, okay, meaning to say your maturity date is less than 1 year, you gotta know that your holding period is actually lower than that, probably like only just 3 months time at most. Okay, so meaning to say when the maturity period's only left like 9 months time, that is the time for you to just quickly sell off your warrants on any kind of pricing. I would say any kind of pricing. Okay, meaning to say you don't go and put up slightly higher just to want to earn a small bits of it. No, don't do that. So if your maturity period is less than 1 year, your holding period is just probably 1 to 3 months. Okay, if it's less than 9 months already, just quickly sell it off. Okay, don't ever hold on the warrants anymore, because it is very dangerous, because the value of it, as I showed just now, the graph of it, okay, it will just go down and go down, and when it comes to the end of it, it goes up very, very fast, and there's no point for you, to just hold on to it, because the value will never go on. The value will never goes up to your expectation, and it will never goes up to your cost even. Okay, so it's a very, very bad thing to just hold on for long. Okay, if the holding period is much more longer than expected, okay, like 5 years time, okay, I would say the trading period is just like 9 months to up to a year. Okay, 9 months up to a year. Okay, so you gotta be very, very crucial. Okay, that this warrants is only for trading purposes. It's never for investment. Okay, you can never hold it more than a year. Okay. So lastly, I will talk about how do you choose about warrants. Okay, how do you choose about warrants? Okay, first thing first, you got to understand the trends of the parent stocks. Okay, the trend of the parent stocks. Okay, I'll give some example at the moment. Like if you talk about right now at the moment, if you talk about, let's say, the glove companies. Okay, the glove companies like Top Glove, as I showed just now, the example. I will not say that is the good trend of the parent stocks. Okay, because as you, I'm not sure whether you guys know about, the glove right now is having a very, very bad outlook. Okay, for the next 2 years, they will have a lot of challenges. Okay, so that is a no for you to just hold on this parent stocks. Okay, whereas if you would like to say at the moment right now, I'll give some idea. If at the moment right now, I would say the preferred trend, I would say the safest one would be the financial stocks. Okay, which is like the banking. Okay, banking kind of stuff. Okay, because to be honest, at the moment the outlook, although yes, I mean, we do hear a lot of bad news regarding on the US markets. Okay, hearing saying like a recession is coming here and there and all this thing. But you gotta know is that the banking stock, they do have this advantage of a higher interest rate. So if you just hold on banking stocks, it will be a great thing. Okay, so the trend is much more safer. Okay, if you're just hold on this on their banking warrants. Okay, so this is what I call the first thing first. You have to understand the trend of the parent stocks. Okay, if you're holding for right now, for example, the crude palm oil, okay, the plantation stocks, okay, you're holding for plantation warrants, that could be a very bad thing as well. Okay, because right now the commodity is coming down in price, so your warrant will definitely come down in value very, very fast. Okay, so that is what I call the understand of this trend of the parent stocks. Okay, and then the second thing, as I mentioned, maturity date. Okay, as I emphasize a lot of times throughout the whole presentations, maturity dates, you gotta be very, very sensitive on this maturity dates. You have to calculate and plan out, before even you get into buying the warrants. Okay, which is to say, like, let's say the warrant is 5 years, at most you only hold it for 9 months. Okay, you have to sell it. Okay, regardless of the trend. Regardless, maybe you say that, I think the trend is coming. I think the trend is pretty good. You got to sell, because it will be a very, very dangerous thing because the time value, the time decay will eat up all of your value of the warrants. Okay, and if it's less than 1 year, I would just suggest this sell off. You not hold for the warrants at all. Okay, so that is why, as I said, it's trading on warrant. It's not investing because the maturity date, this aspect, right? Somehow, when you want to trade warrants, it has a lot of aspect of timing the markets. Okay, it has a lot of aspect of timing the markets. Okay, if you are investing on the stocks, right, you never time the market. Okay, whenever the price goes down in value and then you see that the fundamental is good, you will just invest into it. Okay, or you just probably, if you want to like really time a bit, you just go and buy around the support buy end. That is perfect investment plan. But when it comes to trading on warrants, the buy and sell decision is very crucial on the timing. Okay, because once you buy into it, your holding period is very, very limited. It's like up to 1 month to 3 months, something like that. So you will never wanted to hold it for long. Okay, or else your value is will definitely keep on adjusting, and your value was just coming down and coming down. Even the trend is good, the warrant will not just goes up to what your buying price, what your cost at. Okay, so that is why maturity debt and then warrants is always on just trading. Okay, only suitable for just trading. Okay, and then the last thing I would suggest, if you guys want to choose for warrants, it is best for you to get. I'm not to say best. Okay, it is much more better to just get a premium lower than 10%. Okay, why do I say that? Because this is much more like a preference on your own. Okay, I wouldn't say it's the best thing. Okay, it's just a better solution. It's just a better recommendations because the leverage on this warrants is very, very on certain types of warrant, the leverage is very high. Okay, so meaning to say, if your premium, you're paying a high premium for it, that means you have to get a high volatility, a high price increase, then only you were able to get return from the warrants. Okay, so meaning to say that is not the case because you then hold on the warrant on a longer basis. Okay, because higher volatility, you can never know when is the volatility is coming. Okay, so if you're buying on a very, very high premium, that means you have to wait for a very long time. So it's not suitable to just hold on it. But you can go up to like a premium of like, let's say 20% or maybe a 30%. But I would suggest that is the max of the premium. Okay, because if it goes up too high, then that means that is over the quota of the holding periods. Okay, but when the premium is like 20% to 30%, that means the warrant is actually in low value. Okay, perhaps the market is not really understanding about the trend yet. Okay, and then somehow maybe perhaps you have like a good judgment saying that the trend is coming for the next 6 months. Okay, you can go for it. You can go for it because that would definitely give you a very, very high return from there. Okay, on trading on the value on the value of the warrants. Okay, but if you are a conservative investor, if you are first to touch on warrants, I would really suggest just go for the premium of less than 10%. Then at the very least, you're not losing that much. And remember, the holding period is always just gonna be less than a year. Okay, the holding period is never longer than a year. Okay. Okay, so I'll end my presentation here. So right now we'll go into the Q&A section. Okay, I'll go into the Q&A section. Okay.
Okay, so if you have any question to ask our speaker Debo, you may write your question in the Q&A box and we will address them accordingly. So yeah, thank you so much, Debo, for sharing with us about warrants.
All right, no worries, man. All right, I see there's a lot of questions in this Q&A chats here. But let's see.
Okay, maybe I address them to you.
Yeah.
First question is, Does the structured warrants price move whenever the underlying share price move?
Okay. So structured warrants move whenever the underlying not price move. Okay. We prepared this answers here as well. Okay. So as you mentioned, as we can see here, it's not really necessary whenever the underlying price move, right? And then the structural movement will just go up in value or goes up in value. Okay. The reason of it, because there are multiple reasons of it. These are some of the examples. For example, the call warrants are very, very deep out of money, just as the top glove example just now. The mother share, strike value is at 3 ringgit, but right now the mother shares is like 1 ringgit. So that is what we call out of the money. Okay, it is not giving you return at all. Okay, so at that point of time, that means even though maybe the mother share goes up, the warrant will not go up that much because it's already too much for the losses. Okay, and then most of the time, the second example, the call warrants have higher conversion ratio. This is less likely in Malaysia cases because most of our Malaysia cases is much more like 1-to-1. Okay, there's quite less. There's probably like 5-to-1, but it's not really that common to see like perhaps like 200 structured warrants into one share, something like that. Okay, but that is also another example of it, because if you high conversion ratio, that means there really no demand on trading of the warrants because nobody really wants to get these warrants. Okay, and then third example is that the value, the warrants is really deep, close, to this maturity date, because it's like perhaps maybe next month time the warrant will just expire. So for this kind of warrants, the time decay is too much. Okay, the time value is like literally 0. So your warrant will not move at all because it is already eat up to your pricing of the underlying. And then of course the last thing is that we talk about this liquidity all the time. The last example is about the liquidity. So if your warrants is having a low liquidity, so it will not move at all, because at the end of the day, buying and selling is all because of demand and supply. Okay, if there is much more demand in the market, then the price will usually goes up. Okay, and they gotta have like sellers in the market as well. So if that's the case, then the price then only will move accordingly to the market shares. But it's not the case if there isn't any volume, there isn't any buyers and sellers at all, so the warrant will not move at all as well.
Okay, so that's the first FAQ, right?
Yep.
How about the second FAQ? When can I receive my payment if I exercise the structural warrants or hold the structural warrants until the expiry?
Okay, usually this is like 7 days, okay, 7 market days. When it's expired, okay, what we call expired, okay, usually we call it expired. It's usually within 7 market days, but most of the time, it can be quicker as well. Like I remember, we did it before, like within like 3 to 2 business days. Then the things will just deposit into your account, okay, to give you the shares. But definitely you have to make the payment. Okay, you have to make the payment when the warrants expired. Okay, yeah.
Yeah, that is only when the structural warrants expire in the money.
Yeah, exactly.
If it expire out of money or at the money, then you didn't get anything. Okay. So let's do the third commonly frequently asked question. How do corporate actions affect the price of a structural warrants?
Okay, how do the corporate actions affect the price of the structural warrants? Okay, this one is much more like I'll share some experience where is whenever you have like bonus issues, maybe like you have M&As and all these things, it will definitely affect the price. Okay, because the price will just follow the warrant price. It will just follow the underlying price. Okay, like for example, if we talk about like Gamuda, let's say they are acquiring companies. So definitely the price of it will just goes up, okay, and then the warrant will just follow as well. So it is very significant, okay, it is very significant, okay, because most of the time you have to understand all these corporate actions is very crucial to the shareholders, okay. Like bonus issue in Malaysia, we have this bonus effect. Whenever a company issue up a bonus issue, the share price will just shoot up. So your warrants will definitely shoot up in value as well. And most of the time I will just suggest my members, I would just say that is the period that you should just sell, okay, because that is the period where the volume is higher, and that is your chance to actually just get off the stocks and just get cash back instead. Okay.
Thank you so much, Debo. Usually lower price warrant, do they imply that they are cheaper?
It's not really that necessary, because lower price, it depends on the leverage as well, okay, because you have to understand, like I showed the example just now, 1 ringgit of the stocks, and then let's say your warrants is like 10 cents, that means you're 10 times leverage on the mother shares, okay. So I wouldn't call it like cheap, okay, I wouldn't call it cheap, I would call it affordable, okay. But you got to remember that you're actually at 10 times leverage. So if let's say you're putting a 10,000 capital into that warrant, okay, it goes up to 12 cents, you earn a 20%, that means you're earning 2,000. But it can also goes down in 2 cents, but your capital goes down in 2,000 as well. So that is what we call leverage, okay. So I wouldn't call it cheap, it's much more like I call it affordable, okay. Lower price, that means affordable, but that comes with the cost of higher yield, higher risk.
Okay, thanks for the clarification. What is a market maker? I think you also briefly talked about that.
Yeah, market makers, as I mentioned, it is the middleman of a structured warrant, middle of the structured warrant. It helps in the market, okay. Let's say there's a buyer, so if let's say there's no seller at all, so usually these market makers, they will come out and then they will sell their holding to you, okay. And then for you to allow to get the warrants, something like that. So it gives these structured warrants a higher volume and higher liquidity. So I would suggest, if you really want to trade on warrants, most of the time you can go on to structured warrants. It's much more better because you have the volume. Yeah.
Okay, understand. So what will happen to the structured warrants on their expiry?
Okay, on structured warrants, okay, because structured warrants, we do not have this what we call this most of the structured warrants, they don't issue shares, okay. Most of them, they don't issue shares. They only allow for you to trade on cash, okay. So meaning to say, the structured warrant, let's say it's expired with out of the money, okay, meaning to say it is, let's say it's a bad thing, okay. It's a bad thing because meaning to say, let's say your share price is 80 cents and then your exercise price is like 1 ringgit. So there's no point for you to just exercise it, right? So that means you actually lose, okay, on this structured warrants. So that means there will no settlements, okay. They will not give you anything, okay. They will not give you any earnings, something like that, okay. But let's say your structured warrant is actually in the money, okay, in the money. Like I saw one of the questions just now saying that, one of the chat box saying that what if the premium is negative, okay. Premium, let's say your premium is negative, that means the warrants is actually in the money, okay. That means to say that if you hold this warrant until the maturity date, okay, and it's still in the money, then they will pay you the cash settlements, okay, the cash settlements, and then you are able to earn, okay, from this payments, from this settlements.
Okay, so structured warrants are cash settled, whereby company warrants physically settled.
Yeah.
Okay, these are the differences between structural warrants and also company warrants. Okay, so the seventh and also last FAQ. So does the structural warrants issuer take the opposite position to the structural warrants holder? I think this is also one of the commonly asked questions.
Does the structural warrant issuer take the opposite position to the structural warrants holders? Okay. Okay. Definitely. Okay. If I wouldn't say like it take the opposite positions. As in they kind of like they wanted to bet against you, something like that. Okay. It's much more like they are the independent party, where they actually they wanted to provide you the I would say the liquidity, okay, the volume, the liquidity, okay, for the warrants, okay, for the warrants, okay. So that's why it's always a good thing, okay, it's always a good thing, okay, for the structural warrants issuers, okay, to have these market makers, okay, but the thing about this taking opposite positions of this structural warrants holders, it's kind of controversial as well. Okay, I believe some of the guys, if let's say you really trade on warrants as well, you will know how these market makers they actually operate. Some of this is like, for example, let's say these market makers they actually owns large part of the warrants in the market. Then you can say that they are actually the one that actually somehow control the pricing. And somehow they have this advantage. But it could happen. It could happen. Okay, it could happen. That is why you will only trade on warrants that has actually a pretty decent volume. Okay, from there you are able to understand that there's actually quite a number of buyers as well as sellers in that warrant. Okay, so warrants as usual, you should always check on the volume. Okay, to understand about their the number of the buyers and the sellers. If let's say the warrants is like low in volume, then I would not really like suggest you to go and buy on it, because it could happen on this kind of things. It's what we call this experience, like you can see these things. But on, I would say on the theory terms, the structural warrants issuers, most of the time they don't really take like the opposite positions. Okay, they are like market makers. They only earn from this bid spread. Okay, means say they earn from you on the difference of the buying price and the selling price. They buy here and then they sell there, something like that. So usually they don't care about like they wanted to push up the price or lower down the price. Most of the time they don't care. Yeah. So as long as you go for the high volume warrants, so you will not have this problem at all. Yeah.
Yeah. Okay. If I may add to this, question, I think this is a because I organize quite a number of webinar on warrant, and this is oftentimes people are, questioning, is all the issuer, doing the opposite direction, like what Debo has explained, they actually, whenever they sell you, the warrant, they will actually hedge their position by buying the stocks. If you buy the call warrant, so they will also buy the stocks to hedge the position. So essentially, they will also in the same position like you, because they also want the price to go up, because their hedging position will also make money. Of course, they earn money from the bid and ask spread. Of course, there are also other ways they can make money, which is like the time value. So this is another way where they can make the money from it as well. So a warrant issuer will will also hedge the position. If you buy warrant from them, they will also buy the stock. So they also wish that the stock price will go up in the direction. So this is something just to clarify. All right. So the next question is, I think I've seen quite a number of questions asking,
Yeah.
Are trading warrant Sharia compliant?
Trading warrants on Sharia. For this,
I think maybe if you're not that familiar with it, I can take the question.
Yeah, I'm not too sure of it, because
Okay.
to be honest, I didn't really pay attention on this Sharia
Yeah,
I think
so trading structured warrants are non-Sharia compliant because it's speculative in nature. But if you buy company warrants, that would depends whether the mother share is Sharia compliant or not. Okay, so let me repeat. So if you trade structured warrant issued by third-party financial issuer, then it is definitely Sharia non-compliant. Okay, but if you buy company warrant, that would depends on whether the mother share is Sharia compliant or not Sharia compliant. So if the company itself is Sharia non-compliant, then the company warrant itself is Sharia non-compliant. If the company is Sharia compliant, then the warrant is Sharia compliant. So these are the differences between structural warrants and company warrants. Okay, I think I hope I have answered that question. Okay, do we have margin call for warrant? That is the next question.
Well, most of the time I would say if you definitely get margin call from warrants, but that's definitely for sure because let's say the value go down, then you definitely get to it. But from my experience, I think yeah, I've never really actually tried on like using margin to buy on warrants. Most of the time because I'll just use some cash for warrants most of the time. Yeah. I would say that is much more like a higher risk that I don't really take. So
Yeah,
you know,
because warrant itself is already leveraged, and you still use share margin financing to
yeah. So
do warrant.
exactly, that is like double leverage.
Yeah,
and it can be very
adding
crazy.
oil to the fire, right?
Yeah. So I would say.
All right. Okay, so this is something that is super duper high risk, huh? So
Yep, exactly.
beware, okay? All right. So Maslan would like to ask, how was your selection process to selecting a money making structured warrant?
Okay, Maslan, this is as I shared at the last slides of the presentation slides, which is to say that you will have to really understand the trend of the companies. Then only you will go on choose the warrants. Okay, so the first thing first, definitely you have to go and understand about the companies. How did they do? Is it profit-making companies or is it like a bad one and bad fundamentals? You gotta know everything about the company first before you get into the warrants. And then when you choose for the warrants, like I said, just go for the higher volume one. Okay, there could be like a lot of warrants, different kind of structured warrants from there. But I would just suggest just look for the highest volume on average. Like 3 months time. Then you are able to know which one of the warrants that you should just go for it. Then only you look at like the maturity date, and then the gearing, and then the premium and everything. If it just suits to your investment plan, then just structure your investment plan, plan out your discipline, trading, pricing, trading, selling price, cut loss price, and everything. Then only you go and do something like that. Yeah.
Okay, thank you so much, Debo, for addressing the question. So the next question is, how different is structured put warrant that we have here in Malaysia and the one we have in the US?
Okay, this is actually a good questions. I would say in US we call it options. Okay, in US we call it options. It's not warrants. Most of the time, options. It is much more exciting compared to warrants. Why is that so? Because you can be the buyer of the warrants and can also be the seller of the warrants. Okay, so typically to say in Malaysia, there is only buy. And for company warrants, you can only buy for call warrants. Okay, meaning to say call options. You can only hope for the price to goes up, then only you earn from there. Most of the time, we don't have these put warrants on companies. We only have put warrants on index. Okay, but whereas in US, a lot of them they have call warrants and put warrants. Meaning to say call option, put options. And then you can be the buyer of the warrants. You can be the buyer of the options. Meaning to say you try to exercise it, wishes for bear market or bull market, something like that. But you can also be the seller of the warrants, and then somehow you are able to earn some interest from it. So that is why in US markets, this is much more like exciting things. But definitely it will be very complex as well. So I will really suggest if you really want to go for US options, I wouldn't say like if you're a beginner, you should just try it on. I would say you should get your, idea on investments in Malaysia. Try to get an idea how the market works, how economy works and everything. Then only you can just slowly learn the option in US, something like that.
Okay, thank you so much, Debo. So the next question is, can you explain about premium on warrant?
Okay, premium meaning to say it's, okay, let me put it simply, meaning to say warrant, we have this exercise price, okay, you have this exercise price, and then you will have this mother shares, okay, your share price, okay, the instrument where you derive your value from, okay. So premium, as the name itself says, like premium, that means the meaning is to say like if you exercise this warrant, if you buy this warrant and exercise this warrant, what is the price compared to the current share price? Okay, what is the returns compared to the current share price? Something like that. Okay, so meaning to say, I'll give an example. If the share price of a top glove is like RM1 right now, I just give a hypothetical numbers. The share price of a top glove is like RM1. And let's say the warrant, if you want to buy this warrant, it's 20 cents right now. And then the exercise price is, let's say RM1.10. Okay, RM1.10. So meaning to say you use 20 cents to buy the warrants, and then you use the exercise price of RM1.10 to exercise the warrants to get the top glove shares. So at the end of the day, your cost is like RM1.30. Okay, RM1.30 using the warrants way. Okay, so from there, that means if you buy this warrants, the premium is what? Is 30% higher compared to the share price. So that is typically the premium. That's what we call premium. Yeah.
Okay, so what happens if the premium is negative? Like it is still less than 10%. Is it good?
Okay, if the premium is negative, that means it's a good thing, because that means you are in the money. Okay, you actually have an opportunity to buy the share price at lower cost. Okay, at lower cost. Okay, so it is definitely good. Okay, it's definitely good because you're actually earning. But I would say this: Malaysia's most of the warrants we have. It depends. Like structured warrants is like until the maturity date. Company warrants, you can actually exercise it whenever you have this this scenes. Okay, this negative premium. Okay, whenever it come out negative premium, you can just buy and then you can just exercise the price. Okay, if you are holding it, like let's say for example, you get everything at the cost of 90 cents, and then the share price right now is trading at 10 ringgit. Somehow you can just arbitrage it because you are getting the warrants at 90 cents, and then you just sell it in the market 10 like 1 ringgit. So you're earning a 10% returns, more than that. Yeah.
Okay. The next question is, any conversion fee if you want to convert our warrant to mother shares?
Okay. Okay. Conversion fee. I'm not sure about this. Okay, like how much is the conversion fee, something like that. But yeah, I would say I can't really answer for this conversion fee because, to be honest, I don't really I didn't really have like convert a warrant before, because for me most of the time I just trade on warrants, so it's hard for me to answer for that. Sorry, mate.
Okay. How do you see technology warrant?
Okay, technology, it's, I will answer this question with the outlook. Okay, technology at the moment, it's much more in the bearish movement. Okay, it's not really good for the warrants. Okay, so I wouldn't say it's a suitable time to buy the warrants. Okay, because maybe perhaps you have this idea to buy the dips, something like that. But I would not say this is actually the trading strategy for warrants, because that would be very, very bad thing. Because let's say once you buy in the warrants and then the price just keeps on going down, I will tell you, the warrants will just value goes down and it will not have any liquidity at all. So you will just what you can do is just only looking at the warrants going down in value lower and lower, and then it will be a very, very bad situation for you. So if you really want to buy the dip for technology stocks, go on and just buy the market shares. It's not suitable for you to just trade on warrants and trying to hoping for high return, something like that. That would be a very, very bad idea.
Okay. Kathleen Tang would like to ask the next question. Is there such a thing like put warrant? Can I consider buying put warrants on glove stocks?
No. It's unfortunate to say that we don't really have put warrant on individual stocks at the moment. For now, I don't really see put warrants on any individual stocks, be it for glove stocks, honestly speaking. So sorry to say that there's no put warrants at the moment, because Malaysia market is not really that efficient yet. Okay, most of the time we are now for individual stock we only have buy warrant, we only have call warrant at the moment. So no put warrant.
I come across before put warrant on glove stocks.
Glove stocks.
Yeah, but I'm not sure whether it has already cash settled already. I'm not sure if they are still on trading on the market right now. But I definitely seen one not too long ago.
I see. Yeah.
So there are, but actually, essentially, in the market, we definitely have more call warrant than put warrant. The rationale is that if they sell a call warrant, it is easier for the market makers to hedge. Okay, because they can long the positions. But if they sell you a put warrant, it is harder for them to hedge because they need to short sell the individual stocks. Okay, which is they only have limited facilities to do the short selling on the individual stocks. So that's why we often see there are more call warrants than put warrant in the market. But of course, if the demand is huge in a particular sector, I think the issuer will figure out a way to issue a put warrant for individual stock and figure out how do they gain the hedging exposure to that. Okay, so essentially, the warrant issuer, structured warrant issuer, they do not have a directional view. That goal is to understand what the market needs are, and then they issue the structured warrants to meet the market needs. So that's for that. Of course, obviously, there are no put company warrant. Okay, company warrant all are call warrant. Okay, all are company warrant. That is a call warrant basis. But for structured warrants, occasionally we'll come across put warrant on individual stock. But of course, we'll see more put warrant on index. The rationale is that they it's easier to short sell index through futures. Okay, so you can gain a hedging position. Okay, correct. So yeah, if I may add to that. So the next question is, how do we determine the fair value of a warrant? That's by Izzat.
Okay, to be exact, the fair value of the warrant, most of the time you can just calculate it with this intrinsic value. Okay, so meaning to say, like the example that I showed just now, call warrant, you can just use the share price minus the exercise price, and then try to add up the factors of this conversion ratio as well. So we have the times of the conversion ratio to understand how much of market share you are actually getting from the warrants. So for put warrant, then it will be the terbalik. Okay, meaning to say exercise price minus the share price, and then times this conversion ratio percentage basis. Okay, so that is essentially the ways to calculate the fair value of the warrants. Okay, but definitely, because there is another component which is the time value. So meaning to say, the time value it will be very, very hard for you to calculate it because it will be very, very complex. Okay, the easier way to just avoid time value, to avoid the high time decay, is just you gotta make sure that your maturity, your holding period is not that long. Okay, so that is the way to actually calculate fair value and be aware of the time decay.
Yes, very important. Beware of a time decay. Okay, so must know when it expire. All right, so that leads to the next question by Noor Hisham. I have experience where my stock warrant expired. So when is the best time to sell stock warrant after receive for free from the mother shares?
Okay, I will say, okay, if you're receiving from the mother share for free, right? Okay, I would say, whenever your mother shares goes up in value, just might as well just sell off your warrants from at that point of time. Because to be honest, when the mother shares is like in high demand, most of the time your warrants will have a higher volume. So I would say, because warrants, you gotta be very because you are receiving free warrants from the mother shares. That means this is a company warrant, I believe. Okay, so meaning to say, company's warrants is very crucial in the liquidity. It is very important for you to just sell off whenever there's a volume. Okay, because if there isn't any volume, you will have to just look at what kind of a price they are buying, just sell off something like that. So whenever there is volume, then you are in the bargain, to somehow sell at a higher price, sell at a good price that you want, something like that. So that is, I would say, that is the best time for you to sell off this kind of free warrants.
Okay. The next question is, when we buy a warrant, do we consider ourselves as a shareholder?
Well, I wouldn't call shareholders. I'll call it warrant holders, okay? Because to be exact, as I mentioned, warrants, you should not have the investment concept onto it. It is really, as Shane pointed out, it's very speculative. So it has a lot of trading aspects, okay, for trading on warrants. Okay, so yeah, eventually when you just convert it, you will be the shareholders. But as I said, I won't call myself as shareholders, because I will differentiate myself clearly. Whereas mother share, I'll be investing in mother shares, and then warrants I will just purely for trading purposes. So for trading purposes, I wouldn't say that I am like a shareholders. I'll be looking at the company good side of it and then just hold on to it. No, I will just trade whenever there's a good volume, there's a good demand of it, I'll trade on it, and then I will just earn some profits from there, something like that.
Okay, thank you so much, Debo. The next question, if the warrant is near expiry and is in the money, should we hold until expiry?
Okay, okay, this is a very good question, because most of the time we do have this dilemma. Okay, whenever somehow the value goes up in price whenever it comes so close to the maturity, something like that. But I would say this. It can be coming in the money when close to the maturity, because the mother share somehow it goes up in value, and then your warrants, okay, your warrants, it also goes up in value, okay, and then it somehow it can defeat the time value, something like that. Okay, but for you gotta understand, okay, warrant is just for trading, okay, just for trading. So I would rather just start off, okay, whenever there's a good demand. Okay, so meaning to say, if it's in the money and that I do see a lot of volume, I do see a lot of demand is coming in here, then I will just sell off. Rather than I will just hold it to convert into the mother share. Okay, because warrants for me, it's speculative, it's for trading purposes. If you're structured warrant, I don't see any purpose, to just hold it until the maturity. Okay, you might as well just sell off to trade for it. If it's a mother company warrant, perhaps what you can do is arbitrage it. Okay, you can just convert it, because anyhow it's a negative premium. Okay, it's in the money. Okay, meaning to say you can get the mother shares at a cheaper cost. So just buy the warrant, convert it, get the cheaper cost, and then sell in the market for higher price. Get the spread of it. So that is what I would say, arbitrage opportunity. Whenever there is this thing happening.
Okay, let's do one last question by Jiho. Does implied volatility affect warrant price movement? How do we pick a warrant based on implied volatility?
Okay, this is actually a pretty good question. I believe Jiho is actually some kind of a finance background guy. okay, when we talk about implied volatility on this warrants. I would say, okay, implied volatility, definitely it will affect this price of the warrants, okay? Meaning to say, what do you mean by implied volatility? That means the potential volatility on this company shares, okay? So if the implied volatility is high, it is very good because as you all know, warrant is a high speculative instrument. So high volatility, that means good opportunity. Okay, you're able to buy low, sell high, buy low, sell high. Okay, and the higher the volatility, the bigger the return you can able to get. So that is why if the implied volatility is high, the warrant price definitely will be higher. Okay, and it will be much more exciting, you know, when you're trading on the warrants. But on this implied volatility, how do you pick warrant on this implied volatility? It will be, I would say it's all really depends on the trend of the company shares. Okay, if you are looking at, because implied volatility is big volatility, but you got to understand, like, if the volatility is going down or going up, if it's going down like top left, it will be very hard, you know, for you to just hold on a call warrants. Okay, so that is you got to understand about the trend as well before you picking up warrants just based on the implied volatility.
Okay, yeah, if I may add to that last question, how do you pick warrant based on implied volatility, right? My way is always pick the one with the lowest implied volatility, because that would mean that it is the cheapest in comparison, okay, to the value lah. All right, implied volatility. If I were to have a quick answer to that, would be the lowest is the lower is the better lah. Huh? All right, so because that would mean it's the cheapest. Okay, so I think we shall conclude the Q&A session now. Thank you so much for engaging in such a very robust interaction with our speaker Debo Chua today. So thank you everyone for joining this Q&A. So let me proceed to share my screen. Okay.